morning. You're watching Businessworld Live. I'm Danie Laurel. Happy Friday. It's the start of a new trading day. Let's get straight to our top story. Foreign direct investments to the Philippines more than doubled in the month of March. Fresh data from the Banco Central showed that FDI inflows soared to $808 billion in March. That's from $337 million in the same month of last year. This pushed first quarter FDI inflows to over $2.37 billion, a 45% increase from the $1.64 billion in the same period in 2020. The Banco Central said the increase was mainly due to an improved investor sentiment amid the gradual resumption of domestic activities. Economists attribute the improvement to the low base effects, saying FDI inflows in March 2020 were affected by strict lockdown measures at the onset of the pandemic. And speaking of low base effects, UK-based Pantheon Macroeconomics expects Philippine GDP to grow by as much as 15% in the second quarter. If realized, this would mark a huge turnaround from the record 16.9% slump in the same period of last year. Pantheon says that besides the low base effects, this quarter's performance will also hinge on the government's, quote, more tailored approach to restrictions. Now, infrastructure spending jumped 45% in April. That's on the back of a low base effect and the rollout of projects amid tightened restrictions. Now, data from the DBM showed infrastructure and other capital outlays rising to 58 billion pesos in April from just about 40 billion pesos a year ago. Month on month, though, that's still a decline of 34% from the almost 90 billion peso infrastructure spending in March. The Budget Department said the completion and continuation of DPWH projects, especially its road infrastructure program, contributed to higher spending in the first 4 months of the year. Meanwhile, building costs in the traditionally active first quarter declined, signaling that construction activities remain weak even as the domestic economy slowly reopens. Based on PSA data, the total value of construction went down by 12% to 80 billion pesos from 91 billion pesos in the first quarter of last year. Overall, the appetite for construction activities has yet to fully resume as worker availability remains limited due to lockdown-related mobility restrictions. Okay, guys, thank God it's Friday, and just in some new strands here from the IATF. They are now allowing gyms in NCR Plus and the movement of fully vaccinated seniors. So once again, the Interagency Task Force allowed the opening of indoor non-contact sports venues, which will have this safety seal certificate. So these include, the likes of gyms, fitness studios, skating rinks, and racket sports in the NCR Plus regions. But the caveat is 30% venue capacity for these indoor non-contact sports. Now, another thing that's slated to open, historical sites and museums in NCR Plus. That's going to be at 20% venue capacity, of course, following health and safety protocols, and again, movement of fully vaccinated seniors. So welcome seniors back into the economy. Now, another good development, let's say, is more vaccines having arrived last night. That's 2.2 million Pfizer shots. And this, of course, comes amid the G7 meeting kicking off today. But even ahead of that, there are a lot of discussions on them donating vaccines to the rest of the developing world. And this just in as well from the United States, President Joe Biden did mention that they would be donating 500 million doses of the Pfizer COVID-19 vaccine. That's to the world's poorest countries here. And you can see on my terminal here the amount of worldwide cases and how that has developed there. Pfizer and BioNTech will actually supply the U.S. with these vaccines to be donated. It will be supplied at a not-for-profit price, and around 100 countries are slated to get those shots. So let's take a quick peek at how the markets have been opening over in Asia. First, let's take a look at Wall Street. S&P 500 had notched up another record close. Also, the NASDAQ 100 had gained. Benchmark 10-year Treasury yield slid to the lowest in March. And this happens as investors are judging that the jump in inflation over the U.S. was likely to be transitory, and perhaps the central bank could stay in its accommodative stance. So it does seem to be the case that Asia is having a rather steady open this Friday following all of that news. Generally, save for a couple of indices over in Japan, they do seem to be on the gaining foot. Now let's look at our index. This has come off of quite an exciting week here. You can see on my terminal here, we're still above 6,900 levels. We're keeping our heads above that, up by 0.5%. You can see what a week it has really been. I'll take out the 3-day chart for you guys so you can see our uphill climb and then staying in that region of 68 to 6,900 levels. Now let's talk about the banks this morning, because we are, of course, looking at central bank support. One very interesting piece of news here from the Bank Central is that there were no takers for the BSP's rediscounting loan facility. So it's been 5 months into the year, and banks have not yet tapped this peso rediscounting loan facility amid all of this liquidity that they've released. They have also not yet tapped on the exporters' dollar and yen rediscount facility of the central bank. Now recall that rediscounting is when the BSP extends the possibility for the banks to change the interest rates on their loans. And they did mention that despite this, they did not avail because of the fact that banks still have quite a high liquidity position, plus a deceleration, of course, in the bank lending due to the weaker corporate sector performance. And still on the banking space, the SEC is now supporting the easing of the Bank Secrecy Law. It's throwing behind, its support behind these proposals. The measures are currently pending in Congress. That is, of course, to amend Republic Act 1405. This allows the Bangko Sentral to examine specific accounts. Now, such provisions, according to the SEC, will lift a barrier into investigating things like financial crimes and anti-money and money laundering. And recall that the IMF, among other international organizations, have repeatedly raised the concerns that we are too stringent here when it comes to bank secrecy. Now, capping off this exciting trading week, we do have with us Matt Cabangon. He is the president of AAA Equities, joining us. Good morning, Matt, and welcome to the broadcast.
Good morning, Danie. Always a pleasure to be here.
Okay, Matt, so 6,900 levels here. Just tell us, just a quick idea. Is this start of a sustainable, let's say, what they call herd immunity bull run, when, other countries have seen it, when the vaccine story is really fully underway? Or is this some sort of excitement linked to specific, economic data or corporate news, or possibly IPOs even, and net foreign buying, just related to the past couple of weeks?
Yeah, Danie, we've had vinegar in our mouths for so long with this very long and steady downtrend. Now, whether this recent run-up is sustainable is another question, right? We just popped about 700 points in the last 2 weeks. On many indicators, this is an overbought rally, at least in the short term. So I personally don't expect it to be a sustainable rally, at least over the next month or next 2 months, right? That's not going to be. There's going to be a pullback, or at the very least, some sideways movement. Now, as to what caused this rally, in my opinion, the sell-off that we saw over the last 2 months was, for the most part, unjustified. I think this is the market just sort of correcting itself versus reaction to any sort of news, because really nothing material has changed in the last 2 months. Yes, we have seen cases dip by a little bit, but it certainly, I don't think, is a good enough reason to see a 700-point knee-jerk reaction to the upside.
Okay, but it is the blue chips that have been, being picked up, and some investors are saying they just went bargain hunting on blue chips. What does that mean exactly? Is that, and of course, net foreign buying has slowly, or at least it came in this past week. Does that mean that the overseas investors are now seeing our blue chips as more attractive compared to, other investments in other markets?
Well, it certainly does appear that way. The blue chips that have led the rally in the last 2 weeks have really been the property sector and the conglomerate sector. So it's hard to say that foreigners are seeing our market broadly as winners when really we still have banks lagging, industrials, energy. There is still a lot of catching up to do among the blue chips. So this is a although we have seen the broad index rally, this has actually been very concentrated in select names. So I as an investor would now be looking at uh, the 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 sectors that haven't quite made the move uh, in the last 2 weeks.
Okay, so should we be picking up those battered sectors? You did mention, you still have banks that need to catch up. You still have properties, and now with these, I don't know how to properly term it, the IATF restrictions being eased, perhaps, or going back to a normal GCQ, so to speak, and that allowing seniors. That's quite a first. Seniors, vaccinated seniors, allowed to be fully going out. Does that have a big impact on the consumption space?
Well, first off, IATF news is certainly unexpected. I don't think anyone thought that our typically conservative government would do this so soon. So that certainly is a positive for the property sector. Uh, it's probably something that we'll be seeing in Q4, since it's quite it's going to take a while for people to adjust to those new rules.
Mhm.
Um, Now, as to whether it's time to be picking up banks, that's one of the sectors that I'm still personally, I can still personally see a very good reason for why they're a lagging sector. Uh, on the other hand, properties have sort of run a bit too far. I'm personally looking at the industrials and energy sectors for places where investors can get in now at pretty good valuations without all the diciness of, say, the banking sector, where really a lot of stuff is still too unknown for us to be comfortably dipping our toes.
Okay, so despite the lower valuations, not necessarily worth the risk at this moment yet. Tell us about the infrastructure and construction space. I mean, that's of course related to the property sector, but there's a lot of spending that is just lagging from the government that needs to happen at a certain point. Do you see them getting back on their feet earlier than expected?
Well, Danny, it really is tough to say. Government spending has been lagging really for the last 2 or 3 years. We can blame it on the pandemic, but even before that, we were sort of behind the curve a little bit. Uh, I think the expectation of many who are optimistic is that as we enter elections, that that spending will naturally ramp up, right? That whatever dry powder has been saved will now be sort of let loose. So if that does materialize, then that's certainly a catalyst, not just for property stocks, but in my view, the entire market.
Okay, let's talk about the property stocks in terms of REITs. And the A REIT had an infusion basically, and Ayala Land had bought into that. Is that promising for you? What does that mean in terms of what they believe the potential is in commercial leasing, so to speak? And how does that affect the prospects of other companies that have wanted to get on the bandwagon? You did mention some companies looking into it.
Yeah, we actually have a very robust pipeline of planned REITs this year. For example, uh, the Robinsons Land Group is planning one. The Philinvest Group is planning one. But I think what's interesting about the Ayala REIT and why it has done so well, at least compared to the Double Dragon REIT, is that it is the least reliant in terms of a reemergence of pogos, right? I think that has sort of been a key theme in the commercial real estate space, and the properties that Ayala have infused into this REIT have sort of been independent from the pogo sector, and I think that's something people want. That's something people are looking for because it's hard to imagine uh, if after this whole pandemic that we're going to be back at the best case scenario, which is exactly like what it was in 2019. I think that's just a bit too optimistic. So yes, Ayala REIT certainly is a defensive uh, real estate play that is paying off for investors right now.
Okay, so Ayala Land REIT, they're trading at 36 pesos and 50 centavos, actually up by 2.2% this morning as the markets continue to rally and stay above water. But as you mentioned, be prepared for possible pullbacks in the short term. Thank you so much, Matt Cabangon, President of AAA Equities.
Thank you, Danny.
Okay, checking in on the biggest headlines we're watching. Meat imports in the first 5 months of the year rose almost 27% year on year. That is on the back of a sharp rise in pork shipments. The Bureau of Animal Industry says pork imports from January to May rose about 147% to over 215,000 metric tons. Buffalo imports also increased 52%. However, chicken imports fell 23%, while beef imports also declined by less than 8% in the same period. For Meat Importers and Traders Association President Jesus Cham, the figures reflect the severity of the pork shortage. The PSA estimates hog inventory to be at 9.55 million animals as of April 1st. That is almost 23% lower than the number recorded last year due to the effects of the ASF. The Trade Department is seeking additional funding for small business loans. This as it expects to commit 5 billion pesos to finance such companies by the end of June under the government's CARES program. Now, despite the depleted funds, Trade Secretary Mon Lopez still encourages small businesses to continue to apply for such loans. Meanwhile, the government has also relaxed loan payment terms for tourism enterprises. This means that tourism companies availing of the Bayanihan 2 credit facility will now get up to 2 years grace period to pay the loan amount. The Philippine Star reports that tourism enterprises may also get a second round of loans of up to 5 million pesos, provided that they keep their workers. The Tourism Department said the revision may compel employers to retain their personnel, which may hold off any increase in the country's unemployment. And that's a first look into the business day. Today is June 11, 2021. Catch Business World Live for the market closes at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.